We'll wait a second for our intro to run, or intro ad, because we need to pay for our StreamYard fees here. But just a fair warning to everyone, as it looks like people are starting to trickle in. And there's everyone. Fair warning to everyone. Tom is having some technical difficulties as his main laptop is undergoing some critical updates, so he's on a reserve laptop, which is less than ideal right now. So if he's in and out, that's why. But he's here at the least here in spirit while he sorts out those technical difficulties. If he's not here in actuality, anyways. We got a lot to talk about. These past few weeks have been crazy, but I think it'll make sense to talk about Alibaba, China in general, because there's been some pretty recent regulatory news coming out of there that's caused a number of these stocks have been beaten down, Baba in particular, to surge. And even though they're well below their highs, made up something like 30% in some cases over the last week. So just crazy. We already got a super chat, so hold on a second. let me finish my intro, Jason, and then we'll get to your super chat. Appreciate it, always. But before we get into any of that, be sure to hit the like button, subscribe, all that great stuff. Helps the channel out a lot, and we always put out a new episode every single week around this time, though we just had daylight savings time, so apologize if the time is less than ideal for you now, whereas it might have been better before. It's just the nature of dealing with 5 different time zones on our normal episodes. So appreciate that. So like, comment, subscribe. We always appreciate everyone contributing into the chat. We'll try to hit a number of questions this time around. A little more question focused this episode, ideally, but first we'll hit some of these China stocks and these Chinese stocks and see what's going on. All right, with that said, should we just start with the super chat to respect Jason here? Even though it's not a question, we appreciate it, Jason. It was a good week. It started a little rough on Monday and just finished like crazy. It's just amazing how spastic the market can be. I mean, the incredibly efficient market, of course. Everything is priced accordingly. That's why you get wild swings in just a couple of hours on no fundamental news, because that's just how things work. But anyways,
another one.
And Jason's just coming in with another super chat for a new alarm clock for Quran. Hey, it is 6:30 a.m. in the UAE right now, so we'll give him a pass. And yeah, it's tough. It's tough right now. It's late in Chicago. It's early there. You guys down under, you guys got it easy. Saturday midday, no worries. Jason, if you have an actual question, just let me know, and we can get into it. I see you have a few up here, so we'll definitely get to some of them. Why don't we just start with Alibaba? I suppose take a look at what's happened to it. Maybe we'll look at some of the others as well, the other Chinese stocks out there. But here's Alibaba. It's actually positive on the day, 8%. That's just today. And if we look at the last,
it's only down 50% in the last year now.
Yeah, in the last year, it's only down 50%. It hit a low of 76 just on Monday, I think. Was that Monday? On Tuesday. And surged all the way back up to 108 after some pretty critical news, I suppose, that the Chinese government was basically indicating that they would be less brutal towards regulating corporations as they try to focus a little bit more on growth again, or maybe preserving capital or something like that kind of sentiment. And I think it goes to show that a lot of this drop has been just that. It's been sentiment based. It hasn't really been based on fundamentals as much, because how else would you explain such a wild shot back up, even though it's still well below its recent highs? So I don't know what you guys make of this. If this makes you more or less comfortable with Baba, or if you don't care at all. Chris, I know like Frank, myself, Tom, were you adding at all to Baba this past week, or have you been looking elsewhere at the moment?
Yeah, I haven't done. I've had my head buried in another company for the last week or so now, so I've been kind of working on that. And there's also some there's some tax reasons I kind of want to wait till the new financial year, which is only sort of April. So we're sort of 2 weeks away here in New Zealand for that. So I'm definitely thinking about adding when that rolls around, but haven't done so yet.
And I got super lucky with my timing. I just had some cash built up in the portfolio, and I usually try to stay fully invested. And I was just adding to a few positions, doing some rebalancing, and it just so happened to be, I think, in the all-time low, maybe the day before. I'm not sure, but it was in the $70. So I got pretty lucky with that one. Obviously did not expect a 30 or 40% recovery, whatever that was, over the next couple of days, which is pretty insane that it's up that much and still $108 per share. But yeah, it's been a crazy couple of weeks.
Yeah, I'm in a similar boat. I added a good bit on Tuesday when it was in the 70s for a moment, and that's been nice. It dropped my cost basis down to like $120, and now after the rise, it's something like 6% of my portfolio. So we'll see where that ends up a year from now. This is only a short-term blip. It could easily go right back down to where it was because things are just extremely volatile everywhere. It's not just Chinese stocks, but the whole market has just been going crazy the past few months, especially for a variety of reasons. We have the Fed recently announcing here in the U.S. that they're raising interest rates by a quarter point, and that somehow was positive news because a lot of investors were scared that it might have been a half point. And it's been it's a turning point of sorts for monetary policy, fiscal policy, and that's going to. All that stuff flows downstream into the markets, and investors are trying to predict that, which is always a difficult game. So, and a lot of this is related to regulations as well, just on the Chinese side, with the regulatory crackdowns on a lot of these larger companies, Alibaba included.
Yeah, I think it's. I said this in a video the other day. I think most people tend to accept that a lot of these businesses, like an Alibaba or Tencent, are really good businesses from a financial perspective. Like they've grown a lot for a long time. They generate pretty high returns on capital, and they still have kind of a long runway for growth, I'd say, in most cases. But there's kind of been like these looming things that have just been hanging over these stocks, and it seems like there was a bit of relief on that front this week. And it's probably a good lesson in like not getting too caught up in terms of like anchoring yourself to a price that a stock's previously traded at. I think when something like this happens and a stock shoots up 40%, it's probably quite easy to like pass on it and say, maybe I'll buy it if it goes back down to 70 or something. But, a lot of us thought it was cheap at 200, right? So like 100 should look like a bargain compared to that still, assuming you still like the business and everything.
And I guess when it comes to the broader geopolitical stuff, like the kind of part of the thesis, and again, this is the macro part of the thesis, so it is speculative no matter how you think about it. But my opinion was always that the long-term trend of the Chinese government is towards this more progressive type nature, given it's coming from it's not like a US market, like we're a long way ahead of them, or most Western markets, I guess. But they're trending towards supporting kind of entrepreneurs, their capital markets and everything else. It just so happened the past year or two has looked very bad, and it seemed like the opposite, which is, I think, a big reason of this sell-off. But I always kind of speculated, I guess, that long-term, that won't be a problem. Of course, that is unknowable, but I think if you're looking back 20, 30 years, that could be obvious. Someone like Ray Dalio at least would argue that. And I think now we might be seeing the trend change slightly, probably because the CCP realized that their markets were in some trouble. Firstly, because of the political or the regulatory crackdowns that they were doing, but then add on the fact that now people are concerned about some kind of foreign invasion or something more with the concerns going in Russia and China doing something similar. Then it sold off it almost doubled down on their already problematic situation. So I think they had to make a positive change or statement to kind of turn that around, and it seemed to work. Whether or not that lasts is, again, an unknowable factor, but it's worked out well for now.
Yeah, I think that's well said. Go ahead, Tom.
It's probably worth saying that, like, at the moment, these are just statements that have come out. Like,
yeah, right.
I think people are acting like this stuff's a done deal, and they've said obviously some really positive stuff, and it's like it's interesting. I think I was listening to Brandon and Hamish on the Young Investors podcast this morning, and they were saying something to the effect of like, usually when you get a bit of positive news about this type of stuff with a company, it might cover like 1 point, like maybe it covers the crackdown on tech companies, or maybe it covers the delisting or something. But they laid out like 5 or 6 points of like all of the major concerns that people have around these companies, which was quite interesting. But it's going to have to turn into something, some sort of actual action over the next few weeks, or I don't know, that 40% gain that we had in a day there could well be wiped out. Who knows?
It's just like guidance with all these companies. Like the fundamental news in that quarter might be fantastic. They're on trend with what they've been doing. They beat earnings expectations. But then if the guidance is just a little bit bad, or it's not as great, more like it, then everyone freaks out because they're like, oh no, time to sell. It's amazing how quickly people believe whatever they're told, whether it be from the company, from a government. Not that it should be completely discounted, but that's a pretty violent swing for that, which shows you how important people think that some of these things are. Not to say they aren't important, but they play a huge role in driving sentiment and Mr. Market in general, just very sentiment based.
And regarding, I guess, action from the Chinese government, I don't think we need to see action. I think we need to see non-action.
Right.
The past year, they've been doing a lot of action and it's all been negative. If that just stops and the regulatory environment kind of smooths out, then these companies continue to grow at rates they probably should grow at. We just don't want to see them do any more kind of crackdowns or anything else, which they have been a lot lately.
Yeah. Have you been doing anything on the Tencent process side, Frank, or just Alibaba recently? In terms of like adding to that holding?
No, I haven't. I actually had about 8 or 9% cash position built up recently, which is why I kind of rebalanced the portfolio. I added to 3 positions, and I didn't add to Process or Tencent, but not because I don't want to, because I didn't quite have the cash, and I could more equally balance the other positions. But in the near future, if they remain lower than my cost basis, which obviously is where I'm willing to buy in, then I'll probably rebalance that slightly too. I think it's maybe slightly less weighting than my Alibaba position, but I probably would prefer Tencent to be a little bit higher weighted. So I'll just wait and see what happens with that one.
Nice.
I've got some questions here in the chat about Baba in particular. We'll answer one of Jason's questions since he so graciously gave us a couple super chats. So questions to get the conversation going. If you bought at 200, why aren't you buying more at 100? Well, Frank and I are, or we did at least. Looks like the Alibaba floor hit, but this doesn't mean it's going all the way up, and doesn't mean it doesn't go right back down. So what happens now? Is there any inclination to buy more now? Is there kind of like a ceiling that on your buy price? I know for me, I'm kind of just buying as cash comes in. It's cash in, cash out, essentially, into whatever's cheapest at the time. It's kind of how it's been working, at least over the last few months, just because it seems like with all this volatility, there's some decent buying opportunities a lot of the time. Though, of course, it depends on your own risk tolerance and portfolio allocation, all that great stuff. But lately, I've been buying some Alibaba. I bought some Facebook under 200. And I've been kind of building out those positions a little bit more. But I do kind of have a cap on Chinese stocks in particular. I don't want them to become too large in the portfolio. My only Chinese holding, really, besides some emerging market funds and like my retirement accounts, is Alibaba. So I don't want that to get probably over like 10%, unless it really just keeps growing on its own. But I wouldn't want to add more actual cash beyond kind of that allocation right now. Maybe it's a little arbitrary, but there are some serious macro risks with China. A lot of them are regulatory. You got some of the geopolitical risks, and then you do have kind of some of the uncertainties around growth in general, because it does rely on a lot of the growth of the country and the growth of some of these new spaces. In the case of Alibaba with Ali Cloud and all that stuff, so there are plenty of risks associated with it still. But if you get it cheap enough, you can mitigate a lot of them. But that's kind of my view on it. Do you guys have kind of a hard cap on allocation with Alibaba? If it fell maybe to like 50 or something, would you be looking to take a huge swing again, or what's your thoughts on that? Oh, there he goes.
I think he was about to answer
there
too.
he goes. Tom will be back in a second. This happened before the show. Frank, what are
Regarding
your
my
thoughts on that?
position, though, yeah, I did add to it under $100, obviously, and at the moment it's weighted close to 9 to 10% position or something like that, which I don't want it to be much larger than that. I also have 10-cent process positions, so my kind of overall China exposure, I think around the 25% would be around my cap, unless, like you said, if it runs up in price and becomes a little bit larger than that, I probably wouldn't trim the positions. But I would. He's back.
He's back.
I will add to the position continually as long as it's below my cost basis and I have that cash available and nothing else to do with it. So there's a range of factors that need to work out for me. Recently it did. I had no better opportunity to deploy that capital. So I rebalanced the portfolio. Alibaba was pretty low weighted because it just had been beaten up so much. So I added a little bit. If that situation comes up again, I'll keep averaging down slightly. But I don't plan to make it bigger just for the sake of it, I guess.
Yeah, I think I was going to say basically what Frank said. I only caught the back half of that, but we're in a nice position where we're not managing fixed pools of capital. So as new money comes in and you still like it, then yes, $100 is a lot more interesting than $200. So I'll continue to add to it. But I think a lot of people can fall into the trap of just continuing to average down for the sake of it. And you don't want to get overexposed. That's a trap I think a lot of people fall into too. So that's something to be careful of. And I think some of the announcements do genuinely, they, for me at least, genuinely make me more comfortable with owning Alibaba. I think a lot of value investors have this kind of mindset where they'll say, Alibaba at 75 pre-announcement was clearly way better than Alibaba at 100 post-announcement, but there were some genuine potential risks that I think have been, lessened quite a bit. So it is a slightly different proposition from that angle.
At least in the meantime. It's definitely positive news. How positive is up to you to decide, but definitely positive.
Yeah, and things can change tomorrow. So
yeah, of course.
but definitely
that's always the risk.
I'm not sure if you guys know, or Jack, you could maybe pull it up on Ticker. I think would have it somewhere. How low did the enterprise value of Baba get when it was at $75 or whatever it got to?
I think 200 billion or something crazy.
Yeah, I think it was even maybe slightly under 200, which is pretty insane to me.
Yeah.
How far was it off of being net?
It's still a while away from that.
That was even part of the conversation. We were talking about it as it was happening. Is Alibaba going to become a net stock soon?
Yeah,
just kept falling.
Crazy. I mean, I was putting tweets up saying valuation isn't a factor. It's all political at this point. When Alibaba was 180 or 150 or something, and then it got cut in half from there. So anything can happen.
Yeah, it's part of the wild ride of investing in, especially individual stocks, where just the volatility tends to be much higher than if you buy a broad index. Not that broad indexes can run into problems, but especially with individual holdings, a concentrated portfolio in particular, it can be a wild ride. And it's definitely been a wild ride just these first few months of the year, really over the last year for a lot of Chinese stocks, Papa in particular. You got to be ready to face the pain in the short term, especially. But you could get some pretty wicked gains in the meantime as well, because of how much more volatile individual holdings tend to be compared to a broad index.
Yeah, if you're someone that's an absolute expert in Chinese stocks, Li Lu comes to mind. He's got to be making some seriously attractive investments at the moment with all this volatility going on. I mean, I know he kind of got it handed to him a little bit with his Pinduoduo investment, but that was kind of a tiny position. So yeah, I mean, volatility is a good thing if you know what you're doing and know how to value businesses, right?
If you're very disciplined, if you're decent at valuation, of course, and most of that comes true towards the as we move into the future, then it's great. Volatility is fantastic when you can work on those skills, and then obviously you get a little bit of actual payoff if you're right in predicting the future, which is the hardest part.
Mm-hmm.
Just thinking through.
If you get it cheap enough, though, you don't have to predict all that much correctly. Go ahead, Frank.
I was just thinking through how that $200 billion enterprise value, if you believe cloud can grow at about 30%, which almost the lowest estimate you'll find for Chinese cloud market is 30% growth. So if Alibaba maintains their market share, which is fairly likely, they could even lose a little bit and that would be fine, then I would estimate the cloud business to be worth $200 billion 5 years out from now, which means you essentially got at the lowest of the low, you got the e-commerce business for free.
Right.
Assuming you believe the cloud business can grow at those rates, which is a little bit unknowable, but that is a pretty ridiculous valuation considering the e-commerce is 90% of their revenue and all of their earnings pretty much. So yeah, it got pretty crazy there for a while. Still is pretty crazy in my opinion, but
Yeah, it's all politics. These prices.
It is.
It was a while ago, I think. We've got an interesting question. It's a little bit further up, Jack, but if you can find it, it's another one from Jason about how long are you willing to wait with Alibaba, like if the
Get a
PE stays
timestamp.
low.
You threw a bunch of questions in here.
The hours will be different because different countries.
Yeah,
but
time
40,
zones,
41
right?
minutes. 41 minutes.
What was
Something
the question?
41 your time. How long are you willing to
Yep,
wait? Is now
you got it.
I think that's a really interesting question. Like, is that what dollars is that? That's a big super chat. Is that Australian or is that
got
something
a fat
obscure?
super chat? Hold on, we'll get back to you,
31
Jason.
Australian dollars. He just paid 3 months of the StreamYard fees.
Is
right
that a
there.
world record or what?
Without a question.
No question. Please ask a question. We appreciate it
Thank
very
you.
much.
I've never
But
seen
yeah.
the super chats come through that color. That's crazy.
Yeah, I think
they
each
must-
kind of dollar range have different colors to it
Yeah, that's what I mean.
The first
when
orange
you
tier.
spend the big bucks.
Yeah.
If you have a question, please let us know and we'll get to it. But
And don't
Yeah.
donate again just to ask it. Just drop it in the chat.
then like you could double up if you really want to. I mean, that'd be great.
Super chat.
So here was Jason's question. We'll
Yeah,
answer it
so
in the meantime.
Yeah, so this is an interesting question to me. It's like there's the whole Munger idea of sorry, let's ditch this question and go to the super chat. Sorry, Jason. We've had one come through.
He asked about
thanks,
a company.
Splunk. Okay, I've never even heard of that company. I don't know that we're going to be able to give him his values worth.
Well, we'll take
Have
a
you
quick
guys
look.
heard of it?
It's worth our
More
time.
about-
He's
No,
paying
let's
for our
do it.
StreamYard feeds this month.
Let's do a quick Frank Tabor ticker time on that one.
I've put
Good
it up
time.
on my screen to have a quick look.
Hi guys, welcome to Ticker Time.
Well, it's a
Must
$20
have
billion
seen
company. I'm surprised we haven't heard of it. At least I haven't
Splunk.
heard of it.
Super chat.
Super chats are rolling in, guys. My goodness, it's been a good week. It's been a good week for everyone.
Everyone bought Barber at 75 or something. Just buying a liter of petrol. Yeah, that's almost enough to get a liter, I think, of petrol over here at the moment, David.
Let's see what we're working with. So overview here. Software and cloud solutions. In the
Super high
US
margin
and
business.
internationally. I wonder what share
Gross
is US.
margins.
Where are they
Splunk.
from?
They're headquartered in San Francisco. Splunk Security Solutions. So cybersecurity. Looks like mostly cybersecurity. And then IT operations as well, so kind of related. And then also some sort of like data inputs. So cloud in general with kind of like a cybersecurity sort of lens, it seems. And yeah, you were saying 20 billion.
Yeah, it'd take some work to get our heads around the actual business probably. But what are the financials and everything?
Let's see what's going on over here. Revenue's growing handsomely over the last few years.
Super high gross margins, but they're not profitable yet. I'm guessing they're reinvesting a lot of that though. You'd have to know what the kind of unit economics, what the margins will look like in the future, which for a business like this, I just don't.
Yeah.
They're not diluting too much. What,
No.
3% each year, considering the type of business it is. Usually you see they're very dilutive, so that's probably a little bit of a plus.
I was going to say it does seem quite unusual for a software business to be hit by COVID, it looks like.
Yeah,
In 2020, they had a drop in revenue. That's quite strange. I
yeah,
would have
that
thought.
is odd.
Not sure what's going on there.
Sitting on almost $2 billion in cash.
Valuation wise,
$3 billion in long-term debts. So decent chunk of debt. Then you mentioned the dilution. Significant, but not horrific. It looks like they've
Have they
actually have they bought back some shares over the last 12 months?
well, they're net dilutive either way. They're probably trying to slow down their stock-based compensation, which is never ideal.
Yeah.
But with a lot of those tech companies, it's just the reality of it, I guess.
Take a look at some free cash flow real quick. I mean, they were cash flow positive in the last year, about 100 million. I don't know what that could grow to though.
A
Give
$20
us the
billion
valuation, Jack.
Huh?
Give us some of the valuation metrics on that sucker.
Oopsie. Let me.
I think you'll have to scroll up and go valuation.
Yeah, I was looking at too low.
6 times next 12 months sales, which is about what you'd expect for a high margin cloud type business.
Yeah.
Well, it's actually kind of low compared to some of those old multiples we're getting at the start of last year, I guess, but everything's kind of calmed down a little bit. Is this one down significantly like everything else in the tech space?
Nope, up on the year.
Oh, wow.
Pretty flat on the year, or the last 52 weeks.
Josh is saying data visualization. It's a good product. I'd be interested to know how sticky it is. Like, is it? What kind
revenues were flat
data
on
viz
that
is
one
it
year.
actually doing?
They were pretty flat on that one year, so they weren't down. So maybe it's pretty sticky.
Someone said Cisco made an offer to buy Splunk. I'm wondering what they offered.
Here, let me actually try to look that up.
I'm googling it now too. That might be in a bill. It says they made an offer more than 20 billion. So
interesting, which is right around their market cap.
I guess that might give you a little bit of downside protection if you're going into an investment like that, assuming that offer is something they would consider. Yeah, it's always nice to see someone offering more than what the company's worth, I guess.
Yeah.
Well, you have to. Or else you just buy it on the market.
I mean, I don't know. Without knowing more about the company, I'm not sure what else I could say.
Yeah, no. Unfortunately, I don't think we can add too much value to that other than we just don't know the business.
Yeah, it's in a growing space, I suppose. But
yeah, it's sort of like if we were to ask Jack, because he's the real estate guy, about this random house in the middle of nowhere, that place he's never been, different country.
Sort of, yeah. It's according to this, Bill Miller owns it. Says Call in the chat.
Bill Miller does own quite a lot of stuff, so it'd be interesting.
It's a vote of confidence.
Be interesting to get a portfolio percentage on that thing. He's got a few different funds, I think, Bill Miller as well.
James asks, would Kathy Wood be interested? Would that be a red flag?
Cool.
Yeah.
Should we go back to Jason's question?
Yes.
I think that's an interesting one to talk about, but we haven't got through it yet.
Oh, and just a shout out to David for buying.
Shout out
Tom.
to David.
Some petrol, not some not gas like we say here in the.
It's
States.
literally a liquid, Jack. What are you talking about?
It's short for gasoline.
Oh, okay.
Where were we with Jason? It's 9:41 p.m. Central Time. Whoop.
There we go. Right.
How long are we willing to wait on Alibaba? Go for it, Tom. You're eager to answer this one.
Well, yeah, this is interesting. Like, it's sort of like, do you put yourself in the shoes of someone who actually owns a business, or do you own a stock? Like, there's the Munger idea of like, over the long term, your return will roughly mirror the return on invested capital at the business, right? In the short term, you can have significant multiple changes and stuff. So I don't think that, if the P ratio in a decade or something is still 10 or 15 and the underlying business has done well, I think you'll still get a good result. Something that comes to mind is a business like NVR, the home builder that just bought back shares religiously for a very long time. And I don't know the exact numbers, but maybe retired 90% of the share count or something over the last 20 years, like something crazy. I think they pretty much always traded at like less than 8 times earnings for a lot of that time. And they've recently come up to closer to double that. So there's some interesting kind of capital allocation things you can do with buybacks and stuff that move the needle a lot if the multiple stays down. And we've seen Alibaba do a little bit of that as well. So if you're planning to hold it for a long time, I don't think it matters a huge amount if the PE is in a reasonable range. Like 10 to 15 is not super low.
No, yeah, I was going to say, when I'm doing my projections, especially if it's like a 10-year analysis and you're expecting the company to be quote unquote more mature and not as growthy, 10 to 15 is kind of in the wheelhouse of where historical averages tend to be for a lot of companies. So I think you almost want to assume, like, if you really think it's going to be in a decent position, unless you really think growth is going to be that high and people are going to price it with a premium over like a 15 PE or whatever it ends up being. I like to use this as kind of my base assumption, somewhere in that range. Free cash flow multiples, similar sort of story, 10 to 15. Earnings multiple, 10 to 15, because that's kind of where the market tends towards over the long term. It's been pretty high recently, and with interest rates ticking up, we'll see how long it stays high.
Yeah, I think you kind of want the multiple to stay at around that. Like, of course, it'd be nice if we get to multiple expansion, but we just don't want the multiple to get lower is all that matters. So then we can get our return from the earnings growth, which I think will be relatively high if over the long period, over a long time period, 5-10 years, whatever your time horizon is, if that multiple doesn't contract, then all of your return comes from earnings, which with Alibaba, I think will be a reasonable enough return. So 10 to 15 PE, I'd be pretty happy with to kind of exit around that price, which is a little bit higher than it is right now, I would guess. Depends if you're using non-GAAP earnings or making your adjustments or not. So yeah, there's some adjustments you could think about as well.
Yeah, I mean, as long as you don't have a plan to sell it for a long time, it's sort of like, who cares what the multiple is? You just pay attention to the business.
Yeah, it depends on what you're trying to get out. But yeah, if you're taking a long-term perspective, it's part of the game. You're gonna see fluctuations in multiples because you're gonna see fluctuations in sentiment, especially over many years. Lots of stuff will happen between buy and sell if you're holding for years, if you ever sell.
We've got a super chat from Jason.
And yes, we do. But Jason's just he had a great week. We all had great weeks. The whole market
Steak
had a
for
great
dinner
week
tonight with all these super chats.
Yeah. Jason asks if the process discount went to 25 cents on the dollar, or if Alibaba went to a PE of 4 net of cash, how much of your portfolio would you go in for? Well, first I'd want to ask, why is it that cheap? If it's something fundamental, perhaps, but if it's not, if it's just purely sentiment based, let's
just assume no facts have changed except the price of these two stocks has gone down.
Just like tomorrow with no real news, just pure sentiment. Taking a big swing. I'm not sure how much, because I'm still nervous about over allocating to China for my own preferences, but that I definitely probably double the Baba position pretty quickly.
Yeah, I would still keep my weighting at a point that I'm willing to lose everything, which
that's a good way to put it.
Yeah, so I would definitely add significant amounts to the position if it got that cheap, both Process or Alibaba, but I would still be thinking there's a good chance of zero happening. Not a good chance, but a chance of zero happening. So I would still be careful with how much I weighted that position. Still wouldn't want to be going over too much, around the 20 to 30% range for Chinese exposure. Either way, you just don't need to.
I wonder if would Charlie Munger be getting margin called at that point, or double down again, take up more debt.
He'll be okay. Yeah, I've kind of changed my view a little bit on how I think about position sizing recently. I've started to think about it more as percentage of net worth rather than percentage of portfolio.
That little talk you had with Guy Spear, huh?
Yeah, that genuinely changed kind of how I think about this stuff. So I don't know, 15 to 20% of net worth at cost, something like that's probably the answer to this one for me.
That's where it would end. That would be pretty similar where it would end up for me as well. Coincidentally, something around there, about 10 to 15% if I were to double it.
There's a good question from Misery not long ago, maybe 5 comments back. Can you value your work ethic on investing from 1 to 10 for the whole punch card group? I'll throw mine out there right away. It's probably really low. Like compared to what some people are doing, I might be a 2 or a 3. There's people that do this full time. None of us are full time doing this. So we only have a limited amount of time to dedicate to a few ideas. So compared to, if I think of someone that I know puts in a lot of work, like a Connor Haley, if he's a 10, I'm a 1 or 2. But yeah, I guess there's a lot of people in the markets that have those really low work ethics in comparison. But yeah, I guess it's important how you spend your time if you have limited time to do it.
Yeah, this goes to that like return on brain damage thing, right? Or how much time are you putting into it? How much time do you spend then kind of maintaining it? Because you want to see what's going on with the company, of course, once you own it. It's more than just buying and forgetting, though. That is kind of a large part. You still want to keep up with the fundamentals and see if anything changes in a big way. Maybe it makes sense to take a shot at even more. But it's definitely tough with a day job, as I'm sure we all can agree. It's tough to really do, 40 hours a week of investment analysis because that's just not gonna work. So you got to find a way to be efficient and really focus on the things that you already are kind of following anyways, perhaps, or that you're actually really interested in, so that it doesn't sting as much or doesn't feel like homework as much. It's more enjoyable. You're interested in it. It becomes a matter of focus at that point. I think the amount of time you'd be spending isn't all that much different, but it's kind of what you're focusing on instead, because you don't have a lot of extra time to work through things that maybe you're completely new to or that you're not interested in at all. So you're really focusing on that sort of stuff. Am I making sense there?
Yep.
Thanks, Tom.
Yeah, that's an interesting question. Like, it really depends what you class as spending time on investing. I don't know, like pretty much every second I'm in the car and not listening to Shania Twain, I'm probably listening to an investing podcast of some sort.
Yep.
So, I mean, I don't know if you class that as investing. Like, even when I'm working, in the office, like at my day job, I'm tuning into after dinner investor tea time. Get that man to 1,000 subscribers, please. So that's investing work. I'm learning about the companies that Jason's working on, and obviously, like, we all have YouTube channels as well. Like, I'm trying to put out 2 to 3 videos a week, and there's kind of work involved with that around getting up a bit earlier in the morning for me personally, and then just studying, what I want to talk about in a particular video. Like, with the actual individual company analysis, I would say it's far more sporadic. Like, I don't allocate X number of hours per week or anything. It's sort of like when I find something that really piques my interest, I'm kind of like purely focused on that, I would say. But that might only happen once every 3 months, that something gets interesting enough for me to kind of really dive into that, I would say.
I've been thinking about doing a video kind of on the issue of time with this, where we've kind of talked about it before, where there's a point where it doesn't necessarily make as much sense to spend a ton of time on investments, mainly when your portfolio is small. Like, say you're working, I don't know, 3 hours a week of like real work where you're trying to figure out what investment to go for when you're actively investing. Well, 3 hours a week over a year, that's a lot of time. Could you have made more money just doing some sort of side hustle, making something, get a second job doing with that same amount of time, and then adding that to just like an index. And that's assuming you're actually outperforming the market as an active investor during that time. So eventually, if you actually are outperforming the market or whatever, then it's definitely going to make more sense. But when you have a $10,000 portfolio and could make $10,000 extra in a year by taking on a second job in the same amount of time, it's not always an opportunity for everyone, but it's food for thought on how to really prioritize things depending on your position.
Mm-hmm. And quick rebuttal to Misery's comment with his ratings for some of us.
Oh, what's that? He rated us?
Yeah, I would put Frank above myself all day long.
See.
Like Frank turns over way.
We have a hierarchy. We have a tier list here.
Frank turns over way more rocks than me in terms of like.
Hey, Misery put himself over you. Is all right. So. He believes in himself. Got to give him credit for that.
He put himself. He's got confidence at least.
Yeah.
He threw us all under the bus, but he's put himself close to Charlie Munger. So
that's a shot at Brad. The man's not even here to defend himself.
Yeah, Brad's a little mysterious to me. I don't know how much time he spends on this stuff.
He definitely spends a lot of time, but it is focusing a lot on what kind of some of the greater investors are doing. I mean, we're all doing that, but Brad really gets into the weeds on methodologies and kind of how these big guns focus on their investments and smaller funds as well, which there's plenty of value in that. That I'm sure a lot of the greatest investors ever get their ideas from other investors. You talk with them, you see what they're doing. You're like, hey, that's a good idea. You go from there. It's all part of learning, of course. So we all like Brad's content. It's great. So I wouldn't throw him under the bus just like that. It's good stuff.
Yeah, Brad. Yeah, I struggle with Brad. I like in terms of trying to figure out what he's working on behind the scenes.
Like that
keeps
will
his
never
cards
know.
close to his chest. But it's like it's surprising probably how much he is doing, because I was I'll mention some random company that I'm trying to figure out, like in our group chat, and he'll just send me all these links to videos and articles that he's already stumbled across.
He's a great aggregator.
Relatively obscure companies sometimes.
He's an aggregator. He collects information from tons of different sources, some niche, some not so niche, and then he's a great resource because of that, and that's why his channel's done so well. So
yeah.
So we believe that Brad should be higher than a sorry on this tier list.
Yeah, and Frank's definitely higher than me. So
hey, I'm tied with Frank.
I'm turning over less rocks these days. I've made a big change in how I allocate my time towards, I guess, investing research. And I don't know if it's good or bad yet, but the newsletter has forced me to really narrow in on one company. Every time I get an hour, every second day, whatever, it's mostly dedicated towards just researching and writing that newsletter article. Whereas I used to spend a lot more time just turning over ideas, which I still try to do here and there. But I don't know what's better yet, to really narrow in on one company or filter through a lot of companies. So I guess it's trying to find that balance. But it really just depends on how much time you have and what you're doing with that time, because we're not full-time investors. We have to find our spare moments. Like Tom said, I have an investing podcast on in my car every time I'm driving. I don't listen to music anymore. It's
what just about Shania.
What a reference Shania Twain is. That's going back. You put an age on yourself there, I think, Tom.
Yeah, I still have her on like big Huey Boom speaker next to the shower every morning. Sorry, continue on, Frank.
But yeah, no, I just think when you're full time, I have a 2-year-old son as well, so I'm trying to squeeze in every couple of hours a day if I can, just as much as I can. But yeah, it's hard to find time. It's just you got to make sure you spend your time wisely when you have it.
Right. To that focus.
There's a comment there that Misery is Munger's burner account, and he's just used the word twaddle in a comment, which I think may confirm that. So I think we got Munger in the chat, guys.
Yeah, right. He applauds you, Frank, for your latest push on deep dives. Distracted by some twaddle. Yeah, that's definitely Charlie Munger. That's why you rank Charlie first on his tier list.
Mhm.
Also,
Confirmed.
since Misery, I think I might be wrong on who sent me this, but while he's here, I think he once sent me the focus compounding portfolio and the positions they own. If there's an updated one of that, Misery, please hit me up with that, or anyone that has that. That'd be great. Side note.
Yeah, those guys are great. I listen to their podcast a lot.
Yeah, I think if you're looking for a good investing podcast, that is by far number one to me, is the focus compounding with Andrew Kuhn and Jeff Gannon. Yeah, it's really, really good.
Munger would have nothing to add. Yeah, fair comment.
To another Tom, would you guys class your time into YouTube as investing time? That's kind of a decent benefit of doing investing YouTube, is that your research can also be content, which I think is great. And the incentives can be a little dodgy at times in that, are you just doing this for content? Are you doing this because you're actually interested in it? Ideally, both are true. But in general, it's great that you can put your ideas out there and also get challenged on them. Like this show is great because we could talk about a bunch of different things going on and get new ideas that I wouldn't have thought of otherwise. And so I'd like kind of count it as investing time, but it doesn't, it doesn't really feel that way, but it does kind of at least marginally push towards that purpose.
Yeah. It's it definitely clarifies some ideas in my head, I would say, the YouTube side of things. Like
when you can
trying to explain it
articulate
to
an
a
idea,
camera.
that's big. But then you get like the sort of, it's not anchoring, but if you put like a positive bullish case out there and then it doesn't come true, are you gonna like go back on that? That's where it can get a little tricky, and it's hard to do that. But otherwise, totally agree on the like articulation clarity point.
Yeah, that's something you've definitely got to be aware of, and I think you probably get most of the way over that issue by having what you just said as an idea in your head, Jack, and being aware that confirmation bias
acknowledge
is a
it.
thing.
Acknowledge it first.
Side note, I'm getting DMs on Twitter from some Shania Twain fans who must be watching this. How good?
Content creation's hard when it comes to investing because I am very selective with what I decide to write a thread on Twitter about or what I make a YouTube video about. I definitely, it's probably misleading where I'm actually spending my time usually. Like I'm mostly looking at microcaps but that's not necessarily what my content shows. I try to balance that out to keep people engaged in the content and then provide more value with the more obscure stuff, even though it gets less views or less retweets, whatever it is, whatever platform you're on. So what we put out isn't necessarily, or at least what I put out isn't necessarily what I'm focusing my time on, but it's things that I do focus a little bit of time on that I also know other people care about. So yeah, it's somewhat misleading and you got to be careful not to waste too much time focused on something that's popular, I guess.
And it is a weird balance of like entertainment versus information. So ideally you like making the content too, and then that helps for the entertainment. Like today, this week, I wanted to put a video out on Friday, but I wasn't really sure what to do. So I made a meme video today. So like you can mix in that sort of stuff too. Just like, but for kind of like the core content, I'd agree on that, Frank.
Should we do? I see there's a question there about other podcast recommendations. That might be an interesting one just to run through quickly.
Whose question?
Alexander. Something 27 is the minutes and
I'd assume 10:27 my time.
27 for me.
Wow, it's 10:30 my time already. That was quick. Here we go, Alexander. Any podcast recommendations?
I've just got my phone out. I've got a few ready to go. First, these are my like kind of top listen to ones that I don't miss when they come out. Focus Compounding, like I mentioned earlier. Yet Another Value podcast with Andrew Walker is a really good one because every guest he has is just someone pitching one idea. So they do a deep dive into one company and he's pretty active there as well. So that's a great one. I like Value Hive as well, which is Brandon, forgetting his last name right now, but Value Hive's another good one, a little bit less frequent on that one. And then there's a few of the more mainstreamier ones that I like as well. I know, well, I listen to Tom's podcast whenever that comes out as well.
Yeah.
And the Seeking Value podcast.
Yeah, I was going to say both of those.
I've pretty much dropped that one off, but I'll get back to that one day.
It's tough.
So
it's tough.
Jack needs to do that too.
Yeah, I need to pick up the Jack Duffley show again, or rebrand it or something. It's been a while.
And then to go off investing, if you're looking for a more entertainment podcast, I love Two Bears, One Cave, which is Tom Segura and Bert Kreischer, two comedians. That's an hilarious show if you're looking for something else to waste your time on.
Nice. I've got quite a bit of overlap, but a couple others to add. So Young Investors Podcast, which is Brandon and Hamish, New Money and Hamish Otter YouTube channels. I listen to not every episode, but a few of the We Study Billionaires podcast, just depending on who the guest is. Like Howard Marks was on one of those episodes recently, which was pretty cool. Listen fairly religiously to Jason's podcast, actually, After Dinner Investor. And the Acquirers podcast from Toby Carlisle. I mainly just listen to the Value After Hours episodes, which is pretty much all he's posting at the moment anyway. But those are pretty good. The Business Brew from Bill Brewster. Don't listen to all of them, but a few of those guests are really good. And I still listen to some Phil Town stuff as well, his podcast.
Besides many of the ones you mentioned, the ones I probably do the most, Bigger Pockets podcast. That's all real estate stuff. That's been a staple of mine for years now. That's what really taught me a lot of the fundamentals of real estate investing, and it's still good. They bring on a lot of the larger investors now, especially, but they have like a rookie show as well. A lot of good real estate investing content. Also the Best Ever Real Estate Show, which is like a daily real estate show. That's another good one for real estate. Now, off of real estate, I actually like the Iced Coffee Hour a lot. Graham Stephan's podcast. Mm-hmm. It's really great. It's a pretty broad range of guests, but often a lot of kind of entrepreneurial, investment-minded folks. So that's been really good too.
The one they had on, we should get to the super chat in a sec, but the one they had recently with that guy that did like the gym turnarounds.
Yeah, Alex Hormozi.
Yeah, those are great.
Alex Hormozi, I've been binging both his content and also his wife Layla. They both have, since they both run the company together, which is kind of crazy. Mm-hmm. They have great entrepreneurial content and running businesses and hiring employees and it's really good stuff if you're interested in that sort of stuff. A lot of mindset stuff around that, but it's not like fluff. It's actually good stuff. Easy recommendation there.
Yeah, one very last one actually, just while I remember. Mm-hmm. This is going to be pretty New Zealand specific, but there's one called the NZ Everyday Investor, which is quite good. It's run by a financial advisor, Darcy Ungaro, who covers basically all things personal finance. So there's a bit of real estate stuff in there, even a bit of cryptocurrency kind of stuff in there, but that's quite good also.
A quick question related to podcast and YouTube channel, YouTube content. What speed are we listening at? Because I'm definitely a 2x guy. I know I tend to talk fast sometimes, so that might be part of it.
Usually 1x.
Yeah, I'm a 1x. I don't spare that.
I'm 2x everything. Occasionally 1.8 on podcasts if I can't handle it, or if I'm trying to like if I'm driving, I can't go quite 2x. It's a little too much at once.
Only exception to that is like Red. This morning I wasn't going to say Red. This morning I was listening to Jason's live stream, and I'll like jump from the live stream to a group chat or something, send a message, jump back to YouTube, and then have to watch it in double speed to get live again, because I like to watch those in real time.
Catch up.
Small life hack there if you ever doing that. All right, we'd better get to Khan's super chat.
Yes, let's do that. Thank you, Khan. More Australian dollars. We're raking them in today. Some buy the best companies at lower projected returns. thoughts on the rationale of this over beating up good businesses? This is that whole wonderful business, fair price versus not wonderful business at a great price sort of thing. It's a spectrum. That's my perspective on it. So I try not to be like too discriminatory there. It's kind of all, okay, quality is going to be factored into future growth. Therefore, your valuation would be higher in that case. But then you obviously still have to get it at a good price, or at least a decent price to meet your required returns. And it's the same process for a quote unquote lesser quality business. It might have less growth potential, but maybe it's trading even cheaper. So it's really a spectrum. And I don't think people should get too hung up on any one or the other. Just look for the value. And if the value is in the business quality, then great. If the value is in the assets on the balance sheet, then that's also great. Or maybe it's both in the best case scenario.
Yeah, I think I think some people just really like the certainty with, I guess, larger, more established businesses. I would say that you can still earn really high rates of return with kind of great company type investments. That might be an obvious thing to say, but I'll just say it anyway. I guess oftentimes though you have to. And this is probably like a thing I picked up from like a Phil Town fairly early on. I think Buffett in a lot of ways does the same sort of thing. Like he kind of has a lot of businesses that he might follow, and he kind of just sits around and waits for them to stumble. And, whether it's like a Chipotle food poisoning or, a slowdown in iPhone sales that scares people out of Apple. Yeah. And I mean, if you can find those things, it works really well. It's just, with great companies, I guess you're not going to get a lot of opportunities to buy them, particularly if they're large and everyone knows about it. Like I've had companies like Costco and Monster Beverage and stuff on my watch list forever, but just never had a chance to buy it. Yeah, we've talked about that enough.
Should we change our background again to Mark? It's smiling Jack Ma right now. For those of you who, no one can see it right now. You can just see his ear. But, and anything else on this one?
I guess it's hard to say because, like you said, it's this weird spectrum there is. And if you're buying the best companies over the past 10 years, you probably did really well. If you're buying the Amazons, the Googles, Microsoft, all of those companies that have been the best for a while, you could buy them at high multiples and you still would have had a great return. So it's not to say it doesn't work. And I guess there's even momentum type strategies that obviously work. It's just not my style of investing. I tend to go towards the good businesses when they become extremely discounted, or a completely deep value, some type of multiple re-rate play is always interesting to me. But there's many different ways you can invest and many different ways that work, I guess.
Well said. Thank you, Con. Appreciate it.
Seb's comment is actually quite accurate. Good Investing Talks has some good investing talks. That's quite a good channel actually as well.
There's a lot of really great investing business content. It's almost endless, which is great for us folks trying to learn.
Yeah, and particularly if you're like studying companies, like a lot of CEOs and stuff have been on these podcasts now, and you can get a feel for managers and things when you're doing some work on a company.
Executives, actual fund managers, you can get all sorts of perspectives, big and small, and it's really awesome. That's one of the best things of, especially the growth of things like YouTube and all the other video content, podcast content. It's really awesome. It's hard to like really put a true value on it because it's exponential. I'm trying to get maybe a couple more questions here before we wrap up. I think SC358 puts it well. The goal is owning great investments, not necessarily great businesses. And that's all based on the valuation and then the price relative to that valuation. So yeah, I would tend to agree here. We hope for both, but they're not mutually exclusive. I think that's well said.
1000% agree.
Trying to go back up to some of these questions in the middle. Is anyone looking at our old friend Asos at all? Or no? I have not.
Yeah, I was talking to but I'm not sure if you guys are familiar with Andrew Brown. He's got a YouTube channel here. I was talking to Andrew about Asos, kind of just in comparison to another company we're looking at. But I just find that too hard to figure out the competition, I would say, in that industry. That's the bit that I really struggle with Asos. Like, I don't know if it's going to be Asos that wins, or what is it, Boohoo, or some of these other companies, or whether there can be multiple winners. I don't know the industry well enough.
I think that's what we were kind of saying when we did our episode many months back. The competition is definitely fierce. It's a low margin business, so how much room is there really, and how difficult is it going to be?
Mm-hmm.
You got to be real comfortable with the risks going in.
Yeah.
Frank, any additional looks or thoughts about Asos?
No, the main reason I passed on it originally was because there was a lot of competition and I couldn't pick a winner, and everything in there's cheap. So if you're really interested in that kind of online retail space, maybe a basket bet works out. It's not like Asos is the only beaten down stock in there. Boohoo and all these other competitors are pretty much in the same situation. So I don't know. I'm a bit like Tom, where I don't know what the future looks like for that business. I like that they're trying to do the low cost, give the profits back to the customers. There's a lot to like, but a lot to kind of question, I guess, as well. But yeah, it seems cheap for sure. It's just if you know what the future looks like or not.
Yeah, and outside of the actual business model, I think the CEO left recently, and they're still looking for a new one, I want to say. Right. But I mean, since we did that stream, I want to say the price has almost been cut in half, so could be worth another look.
That's all I got. Maybe one more.
We've got a couple of interesting ones here from Misery on enterprise value. Probably can't bring up 4 comments at once.
Here's why I think enterprise. We'll go through the saga here. Here's why I think enterprise value instead of market cap is wrong. Lazy. If you are trying to assess the intrinsic value of a business, if the company has negative debt, using enterprise value assumes that this cash will never be invested or paid out and then reinvested. Sure. If the company has positive net debt, using EV assumes that the debt will be paid out within the end of your time period of the assumptions. It can't be refinanced or paid down when it's expiring. For example, using EV with Verizon in a 10-year present value of future cash flows model states that Verizon will pay all its debt by 2031, even if it's actually due in 2040. Thoughts?
I've got a few thoughts on enterprise value. I don't know if this will get into a lot of all your specific points, but I don't think all enterprise values are made equal. If that's if that makes any sense. Like, a couple that initially spring to mind would be one like Google, where they just seem to like sit on mountains of cash that doesn't often get invested anywhere. That's kind of one situation that comes to mind. The other one, which is probably a more extreme example, would be like Daily Journal, where they've got this huge stock portfolio, and you can sort of look at it in a way where it looks like you're getting Journal Technologies very cheap because you've got a lower enterprise value relative to what the market cap is because of this huge stock portfolio. But at the end of the day, you're still buying into like all these bank stocks that Munger bought 12 years ago or something, or 14 years ago. So that's one to keep in mind. And the other one that also springs to mind is Curate, QVC, like we've talked about a few times on the channel. So I think they have some debt that matures at, someone in the comments might be able to tell us, but matures in like 2040, 2050, something like that. And I want to say it's at reasonably attractive rates as well. So that again is quite a different proposition to, I don't know, other companies.
The conclusion is it's all relative.
Yeah, you just have to understand the situation, I guess.
It's one metric of many.
Yeah, as with every business.
You're right.
Yeah. So a company like Nintendo is another one that's probably a good example where they have a lot of cash, but they've done absolutely nothing with it for a very long time. So you're probably better off taking market cap in that scenario because we don't know what that cash is actually worth. And I guess you go one step further and even moving away just from cash, all the different assets you could apply a different value too if you're trying to be accurate. Like you probably don't want to take the full value of inventory in certain situations or the full value of accounts receivable, particularly when you're moving towards that more deep value type stuff. So it's always different with every company. But as a general rule, I prefer enterprise value if the capital allocation has been great over the history of that company, I guess. So a company like Tencent, for example, if they have additional cash, which I don't think they do at the moment, but if they were in a big net cash position, that would be appealing because I'd be confident that would be reinvested and have a high return in the future. So it is very company specific, and you probably shouldn't just jump to one. You should assess what the business is and what their history has looked like, I guess.
Couldn't have said it better myself.
What else we got?
Let's make it one more.
Yeah, so Curate's debt, some of it goes out to 2068. That's crazy. That's classic John Malone stuff there.
That is crazy. 2068. Wow.
Yeah. This is like why understanding these nuances is important. Like
Debt terms.
Yeah,
Make a
because
big difference.
Curate does have a huge amount of debt, and it looks that way pretty quickly when you start digging into it. But it's not like it's all due next year. 2068's a while away.
Yeah. Whether it's fixed rate, whether it's callable, what's the term? Is there a balloon payment? So many different things to consider. $1 billion in debt might look very different between companies.
That's free money with inflation running at 8% or whatever it is.
Yeah. Yep.
Yeah.
Or like Buffett's like 0% Japanese bonds he got a while back.
Yeah. I think it's 0 in Europe, I want to say, but like 1% in Japan or something.
Oh, same difference at this point.
Yeah. It's not much.
Crazy.
You know it's cheap when Buffett is sitting on stacks of cash, but also decides he needs to borrow some money.
He's like, you know what? Yeah, I'll take some more cash and just.
Yeah, that's the confirmation that rates are probably pretty low right now.
Yeah.
Since we're over the hour mark, are we allowed to take some non-investing questions and answer?
An off the rails question.
Jason asked earlier at some
Tom's
point.
out. He doesn't want to do it. He doesn't want to do it.
He asks, what cars do the punch card crew drive?
I take the train to work, but
I knew you'd be a non-car guy for some reason.
we have a car, but my wife takes it every day to her job. She's in the suburbs. It's a Mazda 3, and it's some years old. It's a little beat up, but oh well, it's not worth pouring a ton of money into. But yeah, I barely drive. I used to drive all the time growing up in the suburbs in the US, but now I hardly drive at all. I just take the train downtown when I go downtown to work. And then if we go up to like see my parents or something, we'll take the car on the weekend or something. So that's it.
I reckon Tom drives an old Toyota Corolla.
That's what the question was. What
cars do we drive?
What do we drive?
I've got a Ford Ranger.
Oh, he's a big ute man. Truck in America, they say.
I was assuming it would be a little more rustic.
No, I've got that one through work. So
yeah,
I drive a 2020 Suzuki Baleno, a little girl's car. Most people would describe it as, but gets me to A to B.
Suzuki what? Sorry, Suzuki Baleno.
I think it's Baleno, Baleno. Small little hatchback.
Yeah.
Okay. I drove a Hyundai Veloster Turbo in high school, and before my brother got it. And hatchbacks I like them. They're because they're very easy to drive. They're small, easy to park. Generally decently efficient. So they shouldn't get a bad rap.
Frank, just before I cut out, I was gonna ask you what's your preferred like jiu-jitsu submission? Got any favorite moves for us?
I love a triangle choke, but I don't have the body type to do them. That's like a If you don't know jiu-jitsu, you're like choking someone out with your legs essentially, but you need long legs to do it, and that's not me. I like probably an armbar would be my favorite.
Nice.
Standard armbar.
Standard.
You guys. So you guys
Actually,
watching
Kimura. I changed my mind. Kimura is my answer. Lock it in. Thank you.
You're going to have to explain what that is.
Without seeing an image, it's not even going to make sense. It's kind of like bending someone's arm backwards, like similar to what a police officer would do, maybe when they pull someone's hand behind their back. But I don't know. It pops your kind of elbow and shoulder out of joint.
Yeah,
It's
I've
a
just
shoulder
pulled up
lock.
Google images. I've got it.
That's pleasant.
I was just about to say, you guys watching the Eddie Hall Thor boxing match? You guys seen that?
Wait, what? I'm just reading about this.
World's strongest man.
Yeah, they're advertising it as the heaviest boxing match in history.
I mean, yeah, they're
They've-
enormous.
Yeah, they've both lost like 40 kilos, I want to say, but I think Thor weighed in at 150 kilos and Eddie Hall was like 145 or something like that.
That's one I will watch the highlights of, but wouldn't wait up for.
Wouldn't pay to say. Pay to see.
I think it's free to watch. It'll be on like 8 a.m. tomorrow your time, Frank, if you want to watch.
Is it this weekend?
Gigantic people.
Yeah, tomorrow. I'm pretty sure.
Yeah, cool.
Yeah.
So we've got some jiu-jitsu. We've got some jiu-jitsu chat going on here.
Oh, yeah, you
Khan
prompted
Joan.
it, or Tom prompted it.
Das choke, a close second. That's another one you need long limbs for that I can't do if I ever wanted to.
It's our man Khan.
The man.
Misery says asking punch card in a Q&A would be fun. Should we do that one day? Just we ask each other just whatever about anything.
That'd actually be pretty good.
Mm-hmm.
That would be have to find a way to keep it a little bit organized. But that would be pretty fun.
We just have to jot down a few
could go
questions
anywhere.
before.
Yeah.
We should just do an off the rails podcast one time.
Yeah. Right.
A live show.
Yeah.
Yeah.
We should talk about some of the stuff we talk about. So for people watching, usually after the stream ends, oftentimes we'll keep talking for like an hour.
Sometimes an hour. Yeah. Like I'll
just
go
talk
to,
about all sorts of random stuff.
Cricket, geography.
Yeah,
That's a
for a
lot
while
of
there, for a while there, we were trying to teach Jack how cricket works and teach him all the different fielding positions.
I thought it'd be easier coming from like a baseball background, but then that just kind of clouds everything. And I'm looking at it through a strict baseball lens, and you can't do that. Can't do that, guys. For my Americans out there, it's a whole different set of jargon.
This chat's going deep in the weeds now. It's going real inside baseball on jiu-jitsu, talking about a twister and 10th planet. Josh and Khan, I'm loving it.
Well, I think we have a decent of our live stream crowd. We have a decent UFC fan base or fighting sports fan base.
Jack, what would you say is your favorite cricket shot?
See, this is what I'm talking about. I don't know the jar. I could probably be like, oh, that one, but I don't know what it's called.
Okay.
No, I have no idea. I forget. Like that's the equivalent of like the pitch in baseball, the bull in cricket, right? Like the way it's thrown, right?
What?
You said, wait, what did you say? What did you say?
Your favorite shot.
Favorite shot, like
hit, type of
That's
hit.
what-
Oh,
that's what
okay,
I'm doing,
okay.
yeah.
Sorry.
But if you could tell us your favorite types of delivery has been bowled, then yeah, let her rip.
Yeah, that's what I was getting at. Wait, what are the names of the different types of shots? Have we ever talked about this? I don't think we have. We'll wrap it up.
Yeah,
with
maybe
this, 'cause I'm very
I might have
curious.
stitched you up here. Yeah, it's probably been a while since we talked cricket as well.
No,
I
yeah.
think one day we tried to talk you through leg spin bowling, which is like wrist spin. That
No, yeah,
direction.
that we definitely talked about that.
Yeah, we were
Well,
trying
what are
to
the
tell
types of
you like
shots? I don't think we did.
there's like yeah, there's too many to go
It
through.
depends on what direction you're hitting the ball.
All right,
But
if you hit it forwards,
Yeah.
what's that?
Because there's
like a
like a
straight
range
drive.
there's a
Straight
range
drive.
like front, like what they call front foot shots, where you like step forward with, like if you're a right-handed batsman, you're kind of side on like this to
Gotcha.
the bowler. If you step forward with your left foot, they're like, front foot shots, then you have back foot shots when
Is there an advantage to
ball's up
doing
a little
either?
higher in it.
Last question.
No, just kind of depends where the ball like bounces and how high up your body it's coming in. That
So it's
sort
a
of
mid.
thing.
It's a mid bowl move, is when you're just what you're deciding to do with your feet and what direction, or are you kind of planning beforehand?
No, you just got to react.
Yeah, okay, it's all
I
reaction.
want Tom's answer to his own question now.
What's that favorite shot?
Your favorite shot, cricket shot.
I don't know. I used to have this hilarious cricket coach at intermediate that thought you could play a forward defensive, and if you did it really well, it'd still go for 4. So that's like the first thing that just comes to my head. But probably like a Brendan McCullum charging down the pitch straight drive over the bowler's head for 6. I reckon doesn't get much better than that.
Yeah, that's like a dead center home run in baseball.
I like a sneaky
straightaway center.
Like a late cut shot, a really late cut shot.
Mm-hmm. That'll do it.
That'd be my favorite. The sneaky ones.
Jack, can you just role play what a cut shot would look like?
Is that where it goes backwards or sideways or something? Like, what is that?
No, it's like hitting the ball like that direction, like kind of straight out or even slightly behind me.
Yeah, like sideways.
That's a cut shot. Yeah, it's kind of like slice it,
Sure. I mean, could I role play that? Yeah, I don't know. I've never swung a.
Show us your cut shot technique.
I've never
We'll
seen.
Go ahead.
We'll
We'll have to get you to like Australia or New Zealand, and we'll all meet up and go to the cricket.
I would
nets and
love to
get
do
you-
that. I
Get
would
you in
love to
front
give
of
it
a
a
bowling
whirl.
machine or something.
I probably wouldn't be terrible because I got some good hand-eye coordination, but it would be awkward. Like this is a whole different mechanics.
I imagine it being very baseball.
Yeah,
sort of
like
style.
I could probably pick it up and be like, okay, I wouldn't be good, but I could probably like get somewhere. So that would be fun.
You're like, why is the bat this shape? It's so weird.
Yeah, yeah.
And you'll be covered in pads so you don't get smashed in the shins.
Yeah, so it's.
I like the confidence in Jack, but I want to see him bowl a ball.
No, that would not work because that's like totally different mechanics. It's super awkward.
Can't bend your elbow.
No,
Straight arm.
I've never had a good arm, partly because I don't really have a lot of elbow action. So I might be like not horrible because I throw a baseball kind of funky. So it might actually translate well to cricket. I was always a better hitter
Maybe.
though. When I come down there, and then when you guys come up here, we could go over to the baseball diamond and do something there.
Yeah. Well, we played softball quite a bit at school. Did you guys do that in Aussie much, Frank?
Yeah, I actually played baseball growing up until I was about 11. Starts as T-ball. I guess it's the same in the US. The little kids start with the T-ball. Yep. And then softball's pretty popular, but it's mostly girls that play softball. Here, at least.
Yep.
I
reckon we could hold our own.
You probably
It's
be
been a
all right
while,
then.
but
yeah, you have some of the fundamentals then, which will get you pretty far.
And after that, we'll get you in a rugby game or something, Jack.
Ooh, that's not gonna work.
Pads off.
That's not gonna work. The bat to ball sports, I could do decent at those. Contact sports, that's not gonna work. I'm too.
What about golf? Is anyone a golfer?
I need to get into it more as an attorney. It's a very attorney sport, but I've barely done any.
I've just started to get back into it recently. I've never been good. I'm really, really bad at golf, but I really enjoy it. It's a fun one.
I enjoy going to a driving range because you don't have to particularly focus on where the ball actually goes. You just swing as hard as possible.
Did you guys have Top Golf where you're at? It's it's like a driving range. It's like a driving range. Maybe you've seen it on like viral videos or something, but it's a driving range. Often has a couple decks, and there's like targets out there, and it like shows your stats and like how hard and far you hit it. It's kind of fun. I did that for a bachelor party recently over the summer. And that was pretty cool. Gamifying
you can invest
the
in
driving
that,
range.
I think.
You can?
I
Is
think,
it pub-
yeah,
like it's public?
I think I'd have to check, but at least going back a few years when Jeremy was talking about being invested in Callaway, at the time, yeah, they had a
Callaway owns
they had an
Topgolf?
yeah. Well, I don't know if they own all of it. They may have had like some percentage of it,
Yeah,
but
that's the parent
it
organization,
was definitely
Callaway.
in there. Yeah,
Yeah,
they've
Callaway's
got 100% of it.
It doesn't say. It just says that's the parent company. So they obviously have a
Yeah.
stake.
So
Interesting.
if you want some Top Golf exposure, there you go.
Yeah, there's a couple locations in Chicagoland, so
It's quite a cool concept.
it is. Punch cart meetup at the golf course. That would be a good middle ground.
That would be great because we'd all be really bad at golf.
Yeah, it would be on a semi-equal ground.
We could live stream a round of 9 holes or something.
That would be wonderful, actually. Tom, how long are you going to be in the States for the Berkshire meetup?
2 weeks.
Or like just around Omaha, or?
Yeah, still figuring the exact details out, but it's looking like probably about a week in Omaha and then about a week in different spots in Texas.
Where in Texas?
We are.
Tom's about to dox himself right now.
Yeah. What addresses?
I think we're gonna start in Austin, and then
Cool.
Brandon's pretty keen to go to the SpaceX launch site in, is it Boca Chica, which is like a 6-hour drive or something from Austin. Yeah, we looked up the population the other night, and it was like 26 people.
Yeah,
and
it's
we're
like
no,
a few
that
houses.
can't be right.
No, it's a
that
few
can't
houses.
be right.
It is.
Yeah, but then there's like a town, I forget what it's called, like Brownsville or something. It's like half an hour away that has a couple 100,000 people or something.
That's an interesting tour you're taking.
Yeah,
Omaha,
and then
go to SpaceX.
We'll figure it out after that. So we're still trying to schedule a few, podcasts and figure out content and that sort of thing. So we'll have to work around that.
Be a lot of driving.
I'm so jealous of that. That'll be so cool.
That would be.
Yeah, it'll be fun.
Alrighty, let's wrap it up there. I'm tired. So, well, what do I say at the end of these things? Subscribe, like the video, hit that like button, helps us out a lot. Somehow we maintained most of our audience here through our podcast here when we went off the rails.
I love the cricket and jiu-jitsu chat.
So maybe we got to do more of it. So that'd be great. We'll try to factor this in for the last 5 minutes at least every episode, maybe. Though, hey man, most episodes are pretty dense. Anyways, check out all the great stuff in the description as well, including our Discord. Or there's always lots of stuff being talked about because especially right now with all the news and volatility and everything, there's a lot to talk about. And check out ShareSite as well. Get some free months when you sign up for an annual plan there, and that helps us out as well. Thanks to everyone who left super chats on this episode. Very much appreciate that. That helps us out a ton. And until next time, see you, everyone.